Market dilution in crypto. Let's go screen and see what I'm talking about, because market dilution has a bigger effect than I think most of us out there realize. All right, let's go. And as always, any article you see in this video will be linked in the description below. Before we get to dilution, I want to talk about something that dilutes the market as well. FBI cryptocurrency scams cost Americans $1 billion in 2021. Think that's just the United States. Think of all those people, and it says, here we go. The FBI estimates 24,000 Americans got caught up in scams just in 2021. So now we have 24,000 people that are scarred with a crypto engagement. All right, but now let's tie that into market dilution, because remember, every year more and more people get scammed. They're going to be less and less likely to get involved in crypto. But now let's talk about mathematical dilution. Here we go. As of January 2022, there are 16,598 cryptos in existence. And wait a minute, we've got a chart right here that illustrates that. Think about this. December 2021 had 8,688. So we have almost doubled the number of cryptos in the last couple months that are on the market. Dilution of choice, dilution of option, all right? So let's pretend that all the money available that can flow into the crypto markets is represented by my screen here. Yep, Paint 3D, nothing too fancy. But check this out. So now you've got 24,000 people, $1 billion, right? That have been eaten up by scams, schemes, and so forth. That is going to pull a segment of people that are never going to get back into crypto. If you don't believe me, go back to the dot-com era in the stock market and look how many people lost money in the dot-com era and never got back into the stock market. But now let's switch back to that screen and let's talk about the idea of dilution. Here we go. Let's go to the chart right here. Think about this. 5 years ago, you didn't have too many choices in crypto, and now you have, what was that, everyone? Over 16,598 choices. So let's go back to that and start thinking about it this way. If we start looking at crypto as a whole and the money that can flow into crypto, the more choices you have, the more money gets erased, right? It gets erased because it flows into other projects. Maybe it flows into poop coins, altcoins, shill coins, scam coins, whatever the case may be. Either way, the amount of money that could flow into crypto now has so many more choices that it can go into, 16,000 plus choices, and a lot of money in crypto is being eaten up by scams. Think about that. That article that we talked about in regards to the FBI, $1 billion and 24,000 people scammed in 2021 alone. We're not talking about India, Russia, China, Canada, a whole bunch of other big populous countries out there that, yep, fall prey to the same idea. So as we go forward and as we start looking at the crypto market, you have to start asking yourself this. Are all these tokens out there a good or a bad thing? And real quick, the reason why I think all of these coins coming into the market is a good thing, because this is all about supply and demand. And supply and demand is what creates a healthy market. But let's get back to the story, because you're going to understand exactly why this is good and bad. My personal opinion is that it's this. It is a good thing and a bad thing at the same time. Why is it bad? It's bad because as of right now, it is sucking tons of good money out of the market, right? We are erasing all this money that can flow into true utility tokens out there that can really make a difference. But just like in the dot-com bubble, what happens? It's the strong companies that make it. The companies that have viable products, the companies that have utility in use. So yes, even though the market is becoming diluted right now because of, yep, a whole boom in poop coins, meme tokens, and so forth, those tokens, the majority of them, will not make it. That money that is going to flow into crypto is going to go where? To a fewer number of tokens. I've got a stat up here on the screen that says this. However, many companies were able to endure the crash. 48% of dot-com companies survived through 2004, albeit at lower valuations. But think about that. That means 52% of dot-com companies failed within the first 6 years of that data collection. 52%. Can we apply that same principle to the poop coins, meme coins, and all that other fun stuff out there? I think you guys know the real answer. So now you have tens of thousands of people every year getting burned by scams. They're going to be reluctant to enter the crypto market again. But you also have the principle of market dilution, the sheer number of tokens that you can choose from. Every day that I go online to do research, I'm baffled by the new names of tokens out there and what these tokens do. Most of them I can't even tell you. And the meme tokens out there are their whole separate class that the crypto market didn't have to deal with up until recently. So market dilution is a real thing that we all have to consider. That is why everyone out there during the dot-com time stressed investing in good companies and knowing companies' balance sheets, what their goals are, and what their business fundamentals are. We can apply those same principles to crypto. Remember, if you're ever really curious out there about a company that's crypto, just remove the word crypto and replace it with business. This cryptocurrency is going to go up 500% in the next 6 months. This business is going to go up 500% the next 6 months. It just doesn't make sense when we use our common sense. So yep, market dilution, just another idea out there of what is hampering crypto growth right now. It is because that same ball of money that we've had regarding crypto is now being spread thinly amongst how many? 16,000 plus cryptocurrencies. It's only a matter of time before the bubble bursts. Utility tokens and those tokens with actual use and good solid fundamentals will survive. All right, everyone, take care.